What is going on, guys? Welcome back to Investing with Kyle. My name is Kyle, and if you guys are new here and y'all like dividend investing, make sure to subscribe to the channel. We are coming up on 100 subscribers. Yes, not a big amount, but 100 subscribers, and I think you guys will enjoy this channel as far as, stock market investing and stuff like that. So let's go ahead and jump into it. The reason why I made this video, this is going to be a video about one dividend stock that has the chance to 2x in the next 5 years and also has an extremely high probability of giving you some serious yield on cost. And that stock, I've already got it brought up. This is Starbucks, okay? So this is Starbucks Corporation. As you guys can see, I own 9 shares of it, 9.13 shares. The 0.13 is from reinvested dividends. I have an average cost of $68.75. I was buying it very heavily during the pandemic. We're up almost 50% on this position, and it hasn't even been a year. So we're doing extremely well on Starbucks. If we scroll down, we should be able to see some dividends that have came through. Yeah, right here, $4.09 for the month of November. But Starbucks is just such a phenomenal company, guys. Look at this year right here. It's just absolutely been on a tear since the pandemic. Everybody thought it was going to shut down. It's not. They have an absolutely just phenomenal business, all around great, strong brand. You know, there's some companies out there that, they're known and stuff like that, but they don't really have a strong brand. You know, like Popeyes. Popeyes is Popeyes. Everybody knows what it is, but it's not a strong brand. You know what I mean? Starbucks has just a strong brand. They can walk the walk. You know, people say Starbucks, that they can back up their products with good quality service and stuff like that. And every time I go by Starbucks, it's absolutely packed. So I plan on buying this. If it drops down even more, if it gets back down to the high 80s, I probably would buy some. But let's go ahead and get into their dividend growth rate. During the past 3 years, guys, this stock has an average growth rate on their dividend of 17%, almost 18% a year. That is phenomenal for a guy like me that's young, has a lot of time still in the market. That is phenomenal, guys. In the past 5 years, it has an average dividend per share growth rate of 21%. That means that literally they have been, the past 5 years, the average growth rate on their dividend has been 21%. That is phenomenal. That means that you can get some serious yield on cost on this company right here. So this is definitely a company that if you're young, this is a great company. I feel like, in my honest opinion, like I said, I'm not a financial advisor. Make sure to do your own research and do not buy any stocks just because I talk about them and have a good opinion on them. Make sure you do your own research and due diligence. That is on you. But I do feel like Starbucks is a great long-term hold, in my honest opinion. I think that this company isn't going anywhere. It's got a strong brand, loyal customers. People go there every single day and spend like $6 on coffee. It's absolutely ridiculous. But that is a company that I definitely want to build. But that is a solid company. Let's go ahead and get into their financials. And it also has a pretty low payout ratio as well. A very good payout ratio. But let's go ahead and get into their dividend. Their dividend is 1.72%, as you can see right here, roughly $1.80 a year. So not much right now. But don't let that deceive you, though, because they are growing that dividend extremely fast. So it's a great opportunity, not only to get some good capital appreciation. I mean, shoot, I'm already up almost 50% right here. I'm almost up 50% in less than a year on this position. And, like I said, it hasn't even been a year. But this dividend is going to be grown as long as things pan out for this company, which there's nothing right now that shows that they're slowing down at all. But like I said, there's not much companies that you can get capital appreciation and a high dividend growth rate as well. So this is a solid position for me, and I'm really glad that I did pick up a lot of this whenever the pandemic was happening and stuff like that. But that is going to be the dividend stock that I'm talking about, guys. Go do your own research on it. Let me know what you think in the comment section. Leave a comment. I'm a small YouTube channel talking about the stock market, and I just want your guys' honest opinion. But if you're new here, let me go ahead and show you guys my account. I want to show you guys my account. That is not what we want. We want to go right here. Let me make sure there's nothing on there that you guys aren't supposed to see, like my account number. Nope, I think we're good. So if we go right here, this is my account, guys. We have roughly 20K in there. If we go to the 1 year chart, we are doing pretty good. I was buying pretty heavily during the pandemic, guys. We're up 25% this year, almost $4,000. And if we go all time, we are up almost 30% of our money. So we are not doing too shabby in the market. And a lot of the return has honestly came from this year. Just a side note, I know for a fact that everybody here watching has, whenever they started investing, they wanted to be the next Timothy Sykes, the next Tim Sykes, and be a penny stock trader. And that's what this was right here. This period of time right here where my account really wasn't going anywhere. It was actually going down. This was me day trading. And then one day I got fed up with it and I was like, I'm just going to buy quality stocks and just hold on to them. I don't care what happens. And I literally started buying about right here, 2019, went up. And then what do you know? We had one of the worst economic crashes in history. But even though, you know, I was watching my portfolio go down $500 a day. I mean, at one point we were down $1,600, which for me, that's a lot of money at the time. But I was also buying just as much as I was losing. I was pouring money into the markets. I probably dumped like 5K in the markets during that time. And what do you know, guys? Look at this. Look at this absolutely just parabolical rebound. Look at that. It's just absolutely nuts. But these are all my positions right here. I'm going to go to total return right here. Oh, no, we're on Disney. I don't know what just happened right there. But we're going to go to total return. And I want you to just look at all this green that we have, guys. So we're doing very well. The only positions that we're down in are positions that we literally just got into. Like literally all of these. Church and Dwight, I got in last month. Palantir Technologies, I got in like, 3 weeks ago. Kimberly Clark, I got in there probably like a month and a half ago. Dropbox is probably a month ago. Procter & Gamble a month ago. Facebook a month ago. But all those, and even like Costco I've actually been in for a while, but they did announce a special dividend of $10 a share. So just in the dividends that I got, it was $10 a share. I got like, I think 30, almost $40 from Costco. So just that dividend alone, if you include that dividend, if we go down right here, it's going to show more. Right here, guys, $36. $36 just for owning Costco. So if you do just that dividend alone, I mean, that makes up for the minus 13 that we're down on that position. And I know for a fact Costco is going to do well in the future. They're also a good company to invest in, one of my favorites. But yeah, I mean, we're doing absolutely phenomenal in the portfolio right now. These are, I mean, there's a couple stocks on here as well that I bought literally like 2.5, 3 months ago, and I'm already up almost 50%. One of them is Etsy. Look at Etsy today. Etsy is up 12% today. We bought this probably like 3 months ago, and we're already up. Oh, I went too far down. We're already up 59% on Etsy. That is absolutely freaking crazy, guys. I mean, that thing has been on a tear recently. Neo. I mean, I don't even gotta explain Neo. You guys know Neo. Neo, we're up 128%. I freaking wish I would have bought more Neo. I put like 8 shares. I bought like 8 shares of it. So whenever it was like $20 something a share, so I didn't put too much money, and it was just like a spec play, but it paid out. You know, little plays like that pay out in the long run. Another stock that I bought, Pinterest. I bought this one probably 3 months ago, and I mean, look, we're up 58% on it. And there's some shares though that we bought of this company where we're up we're up 200% on some of the shares that we bought in this. If we go down, let's go to show more. I mean, as you can see, I bought 2 shares at $26, 2 shares at $27. So we're up 200% on those shares alone right there. Then I bought another 3 shares at $32. And then right here, I bought them right before earnings because I had a really good feeling about it. And sure enough, they absolutely crushed their last earnings report. I think they were up like 30% in one day. It was absolutely freaking crazy. But so we're doing extremely well. I am super happy with this portfolio. There for a while, I had just like blue chip dividend stocks. But since I'm so young, I really wanted to get some high growth in my portfolio as well. I mean, but we're doing so well in the high growth like side of the portfolio and our blue chips. I mean, look, we're Home Depot I bought this year. I mean, and so it's not just high growth. You know, I'm up 53% on Home Depot. I bought this one during the pandemic. We're up 53%. McDonald's I bought on literally probably the worst day of this year of the market. I bought it at like 100 and I think like 130 something dollars. Let me see here. $141. So I mean, and it's up at 211. So we're up 50% on that. So it's not just the high growth that we're doing well in. We're doing well in like, blue chip stocks and stuff like that. But even like Square. Square is a stock that I bought probably like 4 months ago. I'll say we're up almost 30% on it, 27.68%. So we're doing extremely well. There's like a lot of other stocks that I could tell you. Raytheon Technologies, we're up big. Nvidia, we're up big. Amazon, we're kind of breaking even on Amazon. PayPal, we're up big. I bought them right after their earnings report when they dropped like 8%. And I'm like, why is this thing moving down on 8%? It just makes no sense. I'm already up 35% on it. And I know I'm sounding pretty confident right now, and I know not to get too overconfident in, whenever you're trading stock and stuff like that. But, you do kind of have to pat yourself on the back whenever you have a good year, and right now it's a good year. So I'm very proud of this portfolio right now and of where I've came. I mean, you guys can see this long straight line whenever I was doing just penny stock trading, and finally I got kind of smart and I was like, this doesn't work. This just does not work. We're going to try something new. So sure enough, we did, and it paid out big time. So thank you guys so much for watching. I hope you guys enjoyed that Dividend stock that I recommended to you. Do your own research on it. Don't buy it because I said so. Do your own research on it. I hope you guys did enjoy that video. Like I said, make sure to subscribe to the channel. We're coming up on 100 subscribers, so that would be really cool if you subscribed. Let me know in the comment section below any Dividend stocks that you're talking about, and thank you guys so much for watching. I really do appreciate each and every one of you, even if I only have 80 of you. I appreciate each and every one of you that views the channel. And like I said, I'm going to try to upload 2 videos a week. So other than that, thank you guys for watching. I'll see you guys in another video next week.